Right, okay, so this is Architecture Hub TV. My name's Malcolm Clarke. I'm the founder of Architecture Hub in terms of our architecture practice and now this channel. This channel has been created so that we can add value to people engaging with a new project, whether or not that's buying a new home and developing it, or the home you've got, adding extensions or loft conversions, or even new builds. Part of this series is introducing you guys, the viewing public, to what we're trying to call house doctors, people that are experts in our industry who can help us get to where we want to be. So, for instance, if you're looking for a rewire, we'll be speaking to an electrician who can prepare you for that very soon. But today, we've got a great guest in Ian Wicks. Thank you, Ian, for coming in.
Welcome. Thank you for having me.
Ian is a mortgage broker, and we'll go more into what he does, who he is, and who he can help. But today, hopefully, we give a couple of golden nuggets on if you've got some positive equity in the house that you live and you want to reinvest that, doing some sort of extensions, then this is the way that you're going to get that money out. Or if you're looking for that new project and you're wondering what it takes to get that next mortgage or what the situation is in the mortgage industry right now, then Ian is going to give us a bit of insight into that. So Ian, if you'd like to just introduce yourself and talk about who you're working with at the moment and who is your best client, I suppose.
Right, blimey, right. I'm Ian from Best Mortgage Group. We've been trading for just over 5 years. My personal history is in financial planning, so moved into the intermediary market, I say nearly 10 years ago. So seen lots of changes, lots of mortgage rates starting with 0 or 1, which have been lovely, and obviously now we're in new territory now. So we are local. We're based in Wickford, and we've got a team that is generally we're set up to look after first-time buyers, first-time sellers, and people that aren't moving but are improving. That's generally our sort of niche market, and that's who we're here to look after.
Great. So yeah, anyone that's listened to me, we talk a lot about helping people, like Ian just said, don't move, improve. You know, if you're someone who likes your area, likes the schools, likes the surrounding items that made it a good investment in the first place, then by all means, why don't you stay there and improve that home? And one of the ways that you can do that is obviously with extensions and loft conversions, as we've mentioned. Before we get into taking money out of your property and reusing that, I think it's a good point that we've got a mortgage broker here, we'll talk about some of the headline items that are going on in the industry. Some being what are the rates at the moment? We're hearing they're coming down. What sort of deposits are those on? Because obviously we hear we can get one below 5%, but really that's not for a first-time buyer because it's going to be on a deposit of like 40% or 60%. Mm-hmm. So I think it would be great if you just give an overview of those headline items, where the rates are now for whether or not you've got 10% or 20%, and yeah, what that looks like in terms of putting your mortgage together, what you would be looking for in terms of those people approaching you to find the best mortgage, but also them being best prepared. What documentation should they have? 3 months. Are you self-employed? If you just give us an insight into those sort of things.
Yeah, perfect. Right, okay. Bit of a shopping list there. Okay, so the sooner we see someone, the better. Even if someone is buying in a year's time, I think it's really good to see a mortgage broker. We love to see people as early as possible. Just to make sure they're mortgage ready, so by the time that day comes that they're in a really good position. So in terms of fast forwarding to when you apply for a mortgage company will generally look at the most recent 3 months, so 3 months bank statements, 3 months proof of income if you're employed, or the last couple of years self-assessments if you're self-employed. So validating your income and how you conduct your life is going to be really, really key. There's headline information on like we just said, and there's also a story. So lenders love to look at bank statements and see what you do. Nosy buggers they are, but they do like to look all the same. When it comes to how much you can borrow, generally the starting point is probably 4.5 times income, and this can be increased if you're putting a deposit down of say above 10% or 15%, but the bigger the deposit, maybe the lenders will go up to something like 5% or 5 times your income. If you've got commitments, like i.e. a car and a HP, or childcare or something like that, that can maybe reduce how much you can borrow, because it's all about affordability, and it's all very well having a great house, but if you can't afford to eat and stuff like that, it's not ideal. So there's a lot of responsible lenders out there, and we're the intermediaries. We have to do the right thing by you and obviously represent them well. So.
Okay, great. So for first-time buyers as such, where are we at percentage-wise at the moment?
Again, depends on deposit. So
Right.
if you're in the 5% deposit, the rate is going to, oddly enough, is going to be in the fives, pushing 6. If you're getting in the 10% deposit, you're probably going to start with a 4. And if you're going to 25% deposit, maybe the lower 4s. And if you're the lowest tier would be, or if you can put 40% deposit down, ideally, then you're going to sneak out a couple of 3%ers. But at the time of recording, that's where we are. Give it a week, and who knows? I mean, looking at the last week as an idea, some lenders pull their rates up, and on the same day, some lenders are pulling their rates down. So it's pretty crazy out there, and our job is obviously to navigate our clients through and make sure they've got the best terms for them.
Okay, brilliant. So if you're someone looking to buy that property, and whether or not they've got 10% or 20%, what sort of, from the time that they engage with yourself, how long would it take for them? And let's say that they come equipped with all the documentation that you need, the month's worth of statements and proof of funds and everything else. How long does it take for you to say, brilliant, got that, Mrs. Jones, this is now the offer that you got, this is the amount of money you can lend? How long does that turnaround time take?
That's normally within a day. We can move super quick in that respect. So we would aim to get you something called an agreement in principle, which is that involves a soft search with a mortgage lender. We would verify your income, have a look at your bank statements, and this is effectively a mortgage but without a property.
Right. Okay.
So and this then, the estate agents out there generally like to know that you've got that sort of effectively in place, and you're a legitimate buyer, and then you can go and obviously view a property knowing that you're serious, as it were. So in terms of agreeing that, that's absolutely within a day. Once you find a property, we look to then collect all your documents. Once an application is in, if it's pretty straightforward, and what is straightforward nowadays, but we should look to get your mortgage offer within a couple of weeks, 2 to 3 weeks.
Right.
The longest part would be the actual legal side, and if there's a chain, and what I mean by a chain is if there is 2, 3, 4 houses being sold within the line, as it were. So, but from when you get your keys, it's quite feasible within 3 months. You could be from applying to getting in.
Right. Okay. So, in the mortgage in principle, you can keep hold of that principle for how long?
Depends on lender to lender. Some of them are valid for a month. Some will be valid for 3 months, 4 months.
Right. Okay. But 4 months is normally the max, is it?
Yeah, but then if it expires and you're still actively looking, we can renew it.
And let's say that someone's made an offer on a property on the basis of that mortgage in principle. How active and can it be if the actual mortgage offer could get better in terms of the rate getting lower? Can that then change before the keys are handed?
Yeah. Right. Okay. So someone agrees a rate at application.
Yeah, so if there's a mortgage in principle, and let's say for argument's sake it was 5%, and then 3 months later they got the property, they found it, and they're about to purchase it, but actually a 4.5 mortgage is available. Can that just easily be switched? What's the process?
Yeah, I mean, the mortgage in principle, most lenders, we don't reserve a rate, but when the application is in, that's when you bank your rate.
Okay.
Once the application's gone through, if a lender issues a mortgage offer for a said rate, but then the rates get better before you've completed, we will ask the lender to put you onto a better rate.
Okay, cool. So, types of mortgage. I mean, I dabbled with this a little bit with you a couple of years ago. So, yeah, if anyone doesn't understand types of mortgages, fixed and tracker, if you could just explain what they are, what the difference are, and how someone could use those to their benefit.
Okay. I think in terms of a fixed rate, it does effectively what it says on the tin. So you would choose a rate and it will be fixed for a set period, whether it be 2 years, 3 years, 5 years, or even 10 years. I think if you're looking, if the mortgage cost is pushing your limit on affordability, it may be prudent to fix for a little bit longer, so you're not vulnerable to any potential rate rises.
As people have found out quite
Yes,
drastically in the last 18 months.
There's some shocks out there. So if you want to track a rate, I think you've got to be borrowing within yourself, so you've got tolerance or capacity to cope if the rates did go up. So because a tracker rate, for those that are not quite sure, the Bank of England rate will change. Well, obviously the last couple of months it hasn't, thankfully. But if it does, the mortgage lenders will generally react to that, and then following on, your rate will change and your payment will change as well. So I think you've got to be able to cope with variation and the lack of planning, because it will change overnight effectively.
Yeah, which one that we were prepared to say did.
Yes, yeah.
Okay, so I think that's been a snapshot into, are you preparing to buy a property, how you should be prepared, time frames, what's your options, what the current market is about at the moment. So that's been great, and hopefully anyone that is in that realm at the moment has got a bit of key information to be more prepared. One of the things that we get as architects is people wanting to take money out of the house, positive equity, to then invest into the house. So could you give us some information on terms of that sort of person coming to you saying that's what they want to do, and where they go from there?
Yeah, certainly. So that's very common. Generally, we'll be talking to your current mortgage lender. It may involve your property being revalued. Some lenders have an index valuation, which may be close to the mark, but if you've already done stuff yourself over time and you feel that it's generally worth a bit more, or someone a few doors away has sold and a bit more, then you'll want to get the property revalued. And we literally approach that same lender to raise monies that you need to do the improvements. They will ask what you want to do. They just generally like to know stuff anyway. But that's a pretty straightforward transaction, really. They don't work off future values as a rule. So you've got to really have the equity within your house at that time.
So that's okay. So that's quite an interesting statement. And my question to that would then be, if we are demonstrating what we want to do, would we get a better valuation or an easier process if that person wanting to develop their home with garage conversion, not conversion, if they could then show them a full set of drawings?
No, it's all about security for the lender. So if the lender's going to part with money, they need to know from day one, if there's some sort of Armageddon and you can't pay it, that they've got their money coming back. So they will work off the value at that point.
Right, okay. So identifying these are the changes I want to do.
Yeah.
They'll still be looking at the affordability and where the fallback would be.
Yeah.
Okay.
But this, again, linking back to rates, if this is on your agenda, if we go back a stage and you buy a property and you want to do it up in a couple of years, for example, it may be prudent to choose a rate that's a little bit shorter, because your property value is going to go up in a couple of years' time, because you're going to do all this fabulous work, and you could be putting tens of thousands on your property. So your loan to value will get smaller because you're creating more equity. So again, if a bit of forward planning when it comes to your rates, and we have them chats quite a bit, even when people, before they buy.
So going back to rates there, which I might put you on the spot and say, if you've got people coming to you now, with the rates as they are, no one's got a crystal ball, and obviously at the time of filming, we're all just about to go into March. Are you advising them to 2 years, 5 years, 10 years?
All about the client.
So
it really is
about affordability.
All about affordability. Don't try and play the mortgage market. I think banker rate, as I said earlier, if you're on your limit and if you're borrowing, it's really, really tight, don't leave yourself vulnerable to rises. Fix it for over the medium term, and you know that you're going to be all right. Yeah, it's fine. It's too dangerous a game.
So again, I'm going to put you on a spot. So as we go into the next quarter, don't we? What end of it started from April. Is there any big whispers in terms of it's going to drop, or it's going to see a better? Because obviously, was it a couple of weeks ago we were told we was in recession?
Yep.
So how do you see that affecting your business?
Right, I think in terms of affecting our business, we haven't seen any. There's a lot of knee-jerk reactions out there. I think at the start of the year, there were some headline rates on the news, literally like 2nd of January, headline rates about mortgage lenders bringing rates down. It made for a very, very busy January. So it shows it's how reactive it is. In terms of moving forward, there are lenders generally have to fund a mortgage from several routes. That the bigger banks will have savers coming in, and they can lend the money accordingly. They'll be dictated very much by the Bank of England on what they can lend. Other lenders, they raise money. They have to raise money. They have to go and buy it, and it's called swap rates. I don't know if you've ever heard of that term. So they literally buy it for X amount of cost, and they borrow it for a certain period, and then it sort of suggests that in a few years' time the rates might be a little bit lower.
Right.
Not maybe to the realms of the last 10 years, but it suggests that they may be lower. Equally, we had inflation going up. That tends to halt things a little bit and spook the market. So I sound like a politician, don't I? I'm really going around the houses.
It's connected,
we don't know.
isn't it? It's connected, isn't it, to what the government do?
We don't know. There was a few weeks ago talk of maybe 2024, 2025 rates being a little bit lower. And if you can look at trends of what people are going for, there's a lot of people doing 2-year fixed rates. Doesn't make it right.
No.
But it's right for them.
So if I was being a bit devious with that information,
probably.
If I knew the powers that be, our government and whatever else, knew that a lot of people on 2 years, then in 18 months' time, are we then going, we'll put those up?
I don't think they're that nasty, are they? No, I just think people are generally unsure, so they don't want to commit. If we go back almost a generation, because I am genuine, I'm that old despite not looking it, people were on 5-year fixed rates at X rate, and then there were 2 years in and the rates were coming down, and it's quite soul destroying.
Yeah.
So people remember that and maybe don't want to do it. So that's why there's an increased trend if there are rumours of it going down, but there is no guarantees.
Right. Okay.
So.
Okay. I think that's going to be a bit around it up there. I think that's great. Actually, thank you very much, Ian, coming in.
Pleasure.
If anyone's viewing and would like to speak to a mortgage broker, I can highly recommend Ian and his team. They're fantastic, very friendly, very knowledgeable. They work with all kinds of credit history, we should say, good, the bad, the indifferent. So yeah, if you're interested in your next project or the current house that you're working in, like you want to extend, loft conversions, extensions, new builds, we do it all, but ultimately you need your money and your property in place first. So Ian and his team would be great to get that initial conversation going. But Ian, thank you very much.
Pleasure, thanks for having me. Cheers.
Thank you.